Let's take a look at what's going on with Dogecoin today, guys. Alright, so in yesterday's video, we were watching this falling wedge pattern, something like that. We had resistance, 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 support, support, giving me these two trend lines like that. We were basically bouncing in between them. I was saying if we could break to the upside, or if we can bounce on the bottom and then break to the upside, then maybe we could start looking at 0.339. But I was also saying if we break this support, then maybe we might be going down to the next Fibonacci retracement level at 0.185. The way I got these Fibonacci retracement levels, if you don't watch my videos, I mentioned pretty much every one, but we have a nice little run up. Then when we have trouble at the top, we set up the Fibonacci retracement chart with the tool right here, the Fibonacci retracement tool, drag from the bottom of the run to the top of the run. And basically, when we break below each level, then we look at the next one going to the downside. If we break above them, going up, then we look at the next one going up. And that's why I'm kind of looking at this one up here if we start moving to the upside, just because, well, there's a few different reasons. But anyways, we found support on 0.248 right here a little bit, got a little bit of support, but we broke below that. And then right when we broke below that, check it out, that's when we got like the red candles. So I do have a limit order at 0.185, and now I'm a little more confident on it. Yesterday I was saying that I wasn't really too confident on it until we actually break this support right there, which we did right here. So we broke that support, and what I'm hoping is that we just wick down, come down, hit that Fibonacci retracement level, and then get a bounce up, and then we can start looking at that 0.339 again. Not guaranteed though at all, because there's another bearish thing that I'm looking at as well. So, but first things first. Okay, so the other thing with breaking to the downside is, and I mentioned this on yesterday's video, falling wedges, sometimes they do get a fake out going to the downside and then they'll pop back up. So maybe we'll come down, hit that Fibonacci retracement level, and then get a bounce and start moving up again. That's what I'm kind of hoping for anyways. There's another bearish scenario that I was just mentioning though, which is we just broke this channel pattern right here. I've been looking at this the past, I don't know, I made this a couple videos ago, maybe like 2 or 3 videos ago, where I was talking about this channel pattern where we have resistance, resistance, support, support, support. We're basically using that same support line, but there's also another the other tops, this resistance right here, and we're basically bouncing in between those, basically in that channel right here. Boom, moving down but in this channel. So we broke the support right here going to the downside. We broke that channel pattern. What could be possible, ultra bearish scenario, honestly it is pretty bearish. It could be potentially pretty bearish. So in a channel pattern, what I would do is drag from the top to the bottom of the channel, something like this, and then drag this to the breakout, which could be something like this. Like I said, it's pretty bearish scenario. This takes us all the way down to around 0.079 cents. So, which actually lines up with this previous bottom down here pretty much, and the bottom that we hit. I think this one was like at 8 cents, but yeah, that's similar. Which was the previous bottom down here. We came all the way down over here and hit that level and then started to bounce up. But that's just an idea. I don't know. I'm not sure. I'm hoping that it doesn't. Well, I don't know. I guess I don't care, because if it's cheaper, if it's a lower price, then it's going to be cheaper Dogecoin, bigger position. But yeah, I wasn't expecting it to go down that. Well, I mentioned that in like before, how last year we had this big huge run, and then we came back. We were bouncing in between the Fibonacci retracement levels, and then we actually came all the way back down to the bottom over here. Came up, came down, then got that bounce to the upside. What I'm wondering is, are we going to come all the way back down and then get a bounce to the upside? Or can we possibly hold support at 0.185, maybe a little fake out, and then bounce to the upside and start continuing to be in this channel? But yesterday, I'm on the daily time frame, We broke that channel. We closed that candle right here, and then we started a new red candle. Like I'm saying, maybe, I mean, I don't really like that. Like, it would have been nice if it would have just been that red candle, boom, and then pushed back up and then started like a new candle in here. But we started the new candle below that resistance or that support. So yeah, I'm kind of curious what's going on. Let's take a look at the weekly. Actually, let me put up the 9 moving averages. Because that was one of the, let's see, it's the monthly. Oh yeah, see, let me show you this. Okay, so I mean, we haven't cleared the monthly. How many more days? We have 3 days and 11 hours to close this monthly candle right here, this big red candle. On the monthly time frame, we have the 9 moving average right here, this blue line. And like I talk about on this channel, if we're above the 9 moving average, then that's a good thing. If we're below it, then that's a bearish thing. Or if we're above it, then that could mean potentially that we're going to get support on it. If we're below it, then that could mean that it could potentially be resistance. Right now, it looks like we're testing it. It looks like we are below it slightly. So in the next 3 days and 11 hours, where are we going to end up? Are we going to be below that 9 moving average? Or are we going to just wick down and then bounce to the upside, and this will end up holding support? That's another good question. But we'll keep an eye on that. On the weekly and on the daily, I'm sure that we're below the 9 moving average, and the 9 moving average and the 180 moving average crossed right here, which isn't a good sign as well. The 9 moving average is pushing down underneath the 180 moving average. We had this orange line, the 180 moving average. That's where we're kind of holding support on as well at .248. But we broke below that. Now the 9 moving average and the 180 moving average crossed right there. The 9 moving average crossed the 180 going to the downside, which isn't not a very good sign. So yeah, let's see what happens though. Let's see if we can hold support at 185. I do have a limit order there, but if we start breaking below that, the next Fibonacci retracement level would be the bottom here at around 10 cents. And the target for that channel pattern comes down all the way around to like maybe 8 cents, something like that, which lines up with this previous bottom down here. We came up, came down, hit that 8 cents again, and then got a bounce to the upside. Like I said, the lower it goes, the cheaper Dogecoin that you can get, and the bigger position that you could end up with, should I say. And it might take a while for it to pop back up again. I'm not going to lie. I've seen Dogecoin kind of do this thing like back here where it was just kind of like going sideways for a really long time. It got little pops, but then it just fizzle out, and then it get a pop, and then, well, this one actually got a pop, went down, and then went back up. But let's see what happens with Dogecoin in general. What else? There was one more thing I wanted to talk about that I was looking at just now. I guess it slipped my mind. I'm trying to think. Oh, the volume. That's what I was going to look at. Because I was also looking at the volume over here. Yesterday I was talking about this a little bit, where we weren't getting a lot of volume in this area. So I was wondering if it was like a fake out, or if it was like a bullish divergence or something like that, where we're going down and the volume's not really coming in. But it does look like we are getting some little red volume candles right here. So this could be another argument for this target, or like these targets going to the downside. Either the Fibonacci retracement level sitting at around 10 cents, or maybe, which was this previous bottom, or like around 8 cents, which was this previous bottom down here. This is like another argument for these targets right here. So yeah, I'm pretty confident that I'm gonna get my limit order filled at .185, but can it go lower is the question, which it does seem like it can. It does look like it does. It might have a little bit more momentum going to the downside, but let's see what happens. I'm still kind of hanging out. I'm still like wondering if we can do if this falling wedge pattern can still play out. Like I said in yesterday's video, a lot of times with the falling wedge patterns, you'll get like a fake out going to the downside, and then it'll pop back up, and then it'll start performing. And like I also mentioned on yesterday's video, sometimes it's not a straight move up, sometimes it's something like that or whatever. or boom, 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 boom. I don't know, whatever. Um, that's basically what I'm thinking right now. Let's see how far it goes down. The further, like I said, the further down it goes, the easier it'll be to accumulate Dogecoin. Yeah, I've been trying to dollar cost average going to the downside ever since I took profits up here. I think from where I took profits at, like, let me go to my other chart real quick because I do have it. I do have a line right there. This red line right here is where I took profits, but what I wanted to say is from where I took profits at, it is down around almost 50. It is around 50%. So, and I haven't put all, like, from where I took profits, all this profits I took out, I haven't put all of it back in, like, in these positions, even though I've been trying to slowly dollar cost average on the way down. This is kind of what I was hoping for. Sell it go down, and then be able to buy back cheaper. And like I said, from where I sold to where it's at right now is 50%. If it goes down even more, let's see. If it goes down from there to like there, that'd be around 75% if it went back all the way down to the bottom. Let's see what happens. That's what I mean though. So if it went back down here, then that would be a really good place to buy, in my opinion, if it went all the way back down there. Just my opinion. I'm not saying to do that, but yeah. Next limit order that I'm looking at is .185. Let's see if we could come down, hit .185 real quick, then get a bounce. If not, then I'm wondering if we're going to go even lower than that. I'm going to switch back to my other chart. Okay, so if we come down, I'm pretty confident on this limit order right here, though. It doesn't look like we have much farther to go. And yeah, that's why I watch these Fibonacci retracement levels, though, is because when we break them, going to the downside, then we can look at the next one. We did not hold support right here. We were for a little bit. We held support, but then we broke it, and then that's when we got those red candles, and now we're very close to that next target. I was just putting a limit order here just for fun. I mean, just to like hedge my bets, but looks like it's more than likely going to hit that real quick, .185. That's what I'm looking at. That's like my next target, I guess you can say, is .185. I think that about does it though. Let me know what you guys are thinking. If you guys like this video, hit that thumbs up, and if you want to watch the last video, check it out right here. If you're new to trading, check out this playlist right here. It'll help get you started on TradingView. All right, I'll see you guys in the next one.